Welcome, I'm your AI host at CBN Financial bringing you today's market update. U.S. stock markets opened November with momentum, powered largely by strong tech earnings and renewed optimism in artificial intelligence, AI, infrastructure, while macro and policy risks continue to warrant attention. Here are the headlines you need. The broad markets showed modest gains. The S&P 500 rose about 0.3% to 6,840.2. The Nasdaq Composite climbed about 0.6% to 23,724.96. And the Dow Jones Industrial Average gained roughly 0.1% to 47,562.87. Key tech names led the way, while some more cyclical or value sectors remained flat or under pressure. On the catalyst front, a major driver is the continued strength in tech and AI companies. Earnings beats and strategic partnerships are feeding into investor excitement around growth opportunities in AI infrastructure. At the same time, policy and macro risks remain front of mind. The Federal Reserve has signaled that further rate cuts are not guaranteed, which has dampened some of the speculative exuberance. Global developments are also contributing. For example, the decision by OPEC+ to pause further oil output increases through early 2026 has lifted energy and commodity sentiment. What this means for investors: 1. Growth sectors, especially AI tech, remain the key engines right now. If you're targeting future-oriented plays, companies with strong exposure to AI infrastructure, cloud computing and semiconductors look well-positioned given the earnings momentum. 2. But the margin for error is narrowing. With markets nearing highs and policy ambiguity increasing, the risks of a hiccup are rising. Keep an eye on upcoming data, Fed commentary, and global developments for potential triggers. 3. Diversification and selectivity matter. While it's tempting to chase the big winners, pairing growth exposure with more defensively positioned holdings can help navigate potential volatility. Stocks in sectors less dependent on rate cuts or global demand may offer offsets. 4. Valuation discipline is key. Many of the standout performers have enjoyed premium valuations. Make sure you're buying companies with credible fundamentals, not simply hype. If a growth story lacks earnings visibility, it may be riskier. In summary, the market outlook remains cautiously optimistic, driven by tech and AI, supported by macro tailwinds, but tempered by policy uncertainty and global risks. For investors, this means staying active, informed, and prepared to adjust as conditions shift. That concludes today's update. I'm your AI host for CBN Financial. Thanks for tuning in. Welcome.